Dear friends and viewers, in this video, let's check the triple bottom pattern together. First, let's examine the parts of the triple bottom pattern together. In the next section, we will examine how the triple bottom pattern is formed. In the next section, together we will explore how to recognize a triple bottom. In the next section, we will examine the advantages and disadvantages of the triple bottom pattern. In the final part, we will learn together how to trade with the triple bottom pattern. Welcome to my channel. If you are new, be sure to subscribe to my channel and be sure to hit the bell. Be sure to comment your opinion about the video. Different parts of the triple bottom chart pattern. 1. Bottom 1. 2. Bottom 2. 3. Bottom 3. For neckline, resistance. How a triple bottom pattern is formed. The triple bottom pattern forms 3 distinct stages as sellers attempt to lower the price, but get rejected by buyers each time. First, as a downtrend unfolds, bears break below a recent swing low or technical support level. This brief downside move draws in buyers around a specific price action area. Often, significant round numbers attract more buying interest due to psychological importance. On the first test, buyers provide enough demand for the asset to form a bottom. However, sellers remain motivated to push lower again soon after. So, the pattern continues developing through a second successful defense of support. This further validates the area as significant among market participants. By the third identical bottom test, the committed defense reveals a bullish conviction near these prices. As dip buyers repeatedly enter the same area several times, more traders notice. This buying momentum signals the potential for an upside reversal. Now anticipating a break above resistance, technical traders prepare for long entry triggers once a rally unfolds. This opportunity comes from the triple bottom pattern progressing through the 3 critical downside tests. First, how to identify a triple bottom pattern. 1. Prior trend. With any reversal pattern, there should be an existing trend to reverse. In the case of the triple bottom reversal, a clear downtrend should precede the formation. 3 lows. All 3 lows should be reasonably equal, well-spaced, and mark significant turning points. The lows do not have to be exactly equal, but should be reasonably equivalent. Volume. As the triple bottom reversal develops, overall volume levels usually decline. Volume sometimes increases near the lows. After the third low, an expansion of volume on the advance and at the resistance breakout greatly reinforces the soundness of the pattern. Resistance break. As with many other reversal patterns, the triple bottom reversal is not complete until a resistance breakout. The highest point of the formation, which would be the highest of the intermittent highs, marks resistance. Resistance turns support. Broken resistance becomes potential support, and there is sometimes a test of this newfound support level with the first correction. Price target. The distance from the resistance breakout to lows can be measured and added to the resistance break for a price target. The longer the pattern develops, the more significant is the ultimate breakout. Triple bottom reversals that are 6 or more months in duration represent major bottoms, and a price target is less likely to be effective. Advantages and disadvantages of the triple bottom pattern. Advantages. Signals strengthening bullish momentum. Clear floor provided by support level. Defined technical entry and stop areas. Favorable risk reward gave the size of a subsequent move. Disadvantages. Inverse triple top is more reliable. Requires substantial price action. Stop distance may be wide. Breakout entries can lag market turns. What is the success rate of the triple bottom pattern? According to research, analysis, and back backtesting performed by stock chart pattern experts such as Thomas Bulkowski and Cody Hines. The success rate of the triple bottom pattern is between 74% and 79%. How reliable is a triple bottom? The triple bottom pattern is one of the most reliable stock chart patterns, with some estimates suggesting that it leads to a reversal into an uptrend around 75% of the time. How to trade the triple bottom pattern? Traders should only enter the long position when the price breaks out from the resistance level or the neckline. Stop loss. In the case of the triple bottom pattern, the stop loss should be placed at the third bottom of the pattern. Price target. The price target should be equal to the distance between the neckline and the bottoms.